welcome back. Oh, here we go. Good afternoon, everybody, and welcome back to Money Multiplier with Kim. Today, I have my special guest, Robert Hayek, on the line today, and he's going to teach us about debt elimination, part 1. Join us. Good afternoon, everybody, and welcome to Money Multiplier with Kim. Today, I'm going to have a special guest. His name is Robert Hayek, and he's going to teach us about debt elimination, a topic for everyone to learn. Hi, Bob. How are you today?
I'm great, Kim. How you doing? Thanks for having me.
Yes, thanks for coming on. I appreciate it. So today, we're going to talk about debt elimination, right?
Sounds like a plan.
So why don't you give us a brief overview about your family bank?
All right. Well, first off, your family bank is not your typical brick and mortar bank. Your family bank is basically a concept. It's a software program that we use here at Financial Independence. And it's a way for people to eliminate debt. And we're talking about credit cards, mortgages, student loans, medical bills, basically anything you're paying interest to. We show them how to get out of debt in 9 years or less, including the mortgage, without them spending any more money than they spend right now.
Wow, that sounds great. Maybe you can tell us what that means. So I know a lot of people are talking these days about being your own bank and infinite banking. Is this that kind of a concept where you're teaching people, how to do this and be able to eliminate their debt through this type of process? So is that what this is?
Yeah, infinite banking is the way the wealthy finance anything that they're purchasing. Instead of using conventional lending sources, they build their own bank. And they do that with a whole life insurance policy. And they build their bank and then they borrow from themselves and they pay themselves back. Larry McLean, about 20 years ago, took that concept, tweaked it for debt. So we're able to take people in and take their debt and basically get rid of it in a very short time using that same process.
Well, that's interesting, Bob. That sounds like something that what's going on right now, this seems like a great option for people that are dealing with a lot of debt. I know, through the pandemic that, a lot of people had to use credit cards and they had to use retirement savings and things like that to be able to get through these last couple of years. And now they're finding themselves in these huge mounds of debt and no way of getting out of it. So what would you say to someone who is in that situation? Would this type of a program be good for those people, or would this help them get out of that situation without hanging on to that hamster wheel where you're constantly just throwing money to lenders and credit card companies with these high interest rates? Would this save them interest? Would this be a good opportunity for these people to, kind of eliminate this debt?
Absolutely. Yeah, a lot of times people get to the point where they can't get themselves out. And it doesn't matter what income bracket you're in. It's just, it just gets to be that, like you said, hamster wheel. You just keep going and going and going. And we show them how to put it together. And what we do is we take the information, we put it in our database, and we come out what we call a report that's going to show them how they're paying their debt currently and how long it's going to take them to get out of debt based on what they're doing currently. Then what it's going to show is it's going to show exactly what we're going to do and how fast we can get them out of debt. But not only that, all the money they saved in interest. But more importantly, as they're getting themselves out of debt, we're also forcing them to save, which is another part. And then on top of it, what we're doing is we're giving them a death benefit on top of it. So to give you an example, I had a landscaper, had about $1.3 million in debt, spent about $34,000 a month out to his creditors. We were able to locate about $3,000 a month over and above his minimum payments that he was paying his creditors. That 3,000 a month is what we use to fund the bank, as we call it. And we were able to get him out of debt in 36 months, 37 months, I'm sorry. And at that point in time, he had $800,000 back in his bank. So we paid off 1.2 million of debt, gave him back 800,000 in bond in value into his policy, and it also bought him $1.2 million of death benefit for his two boys that he didn't have coverage for. That is a pretty powerful way of using a dollar.
That's amazing. I know, and I talk to a lot of my clients, and I get the same response is, people are using credit cards as a means to sustain their lifestyle. Many people, unfortunately, are living beyond their means, right? So that's why it's creating this debt, and why it's creating these situations where people are finding themselves in and they can't get out of, because it's just like a vicious cycle, right? So, you want to go and buy something, and I always share this mentality with people when I talk about debt and about saving, is that people need to focus on the future, right? So you need to focus on how that's going to look. You don't want to just live for the moment. So people have to learn how to adjust to their lifestyles in order to be able to start saving money. And I know when we spoke, you say like probably only 3% of people are saving of excuse me, that people are saving only 3% into their savings on a yearly basis, right? I mean,
Yep.
is that true? I mean, is
Yep.
that the reality?
That's the reality.
Because I know when we had talked, we there was a chart you shared with me, and I think this chart is really powerful. So in that um, illustration, it shows that people are only saving, like I said, 3% in savings. They're paying 34% in interest, 40% in taxes, and 23% in lifestyle. Right.
Right.
So now that's skewed a little bit. That's, really is not the way it should be. So that saving should be a lot higher. And to be honest, we need to pay a lot less interest. Every credit card debt out there, you're paying 28 or 27%, right? I mean, it's some astronomical amount of money, and it's only going up. So every time you use a credit card, or every time you take out a loan, or whatever that number looks like, you're looking at high interest rates. You're not talking 1% or 2%.
Well,
Um,
even if it's 1 or 2%, I mean, I get a lot of people that tell me that they don't want to get rid of a mortgage because they're paying a 3% mortgage rate, interest rate. And I'll tell them, well, do the math. You're not paying 2, 3%. You're paying 50 and 60% for the first 10, 15 years. And, or they'll tell me, well, I'm going to be out of my loan in 10, 15 years because I'm paying an extra $1,000 a month. I'm like, well, that's not a good idea either, because let's say if you did that, that's $12,000 a year. You did it for 3 years, that's $36,000. And that you gave the bank up front. Now you call the bank and say, hey, look, I lost my job, whatever. I can't make the next mortgage payment. I gave you 3 years up front. You can take it out of there. They're going to give you, no, you got 90 days to make that payment or you go into foreclosure. So there's all ways to do this, and people just, they don't know. They don't know. So they need to be educated. They need to understand, and they need to see a different way to do it. And once they understand it, they get it.
right. Yep. Exactly. It's like with anything else. People are not educated enough to understand, what is out there. They don't comprehend that they're paying all this interest. It doesn't really sink in, because they're not really looking at the interest. They're looking at the amount they owe. Right.
Right.
So if I owe 10,000, they're not looking that they're not seeing that they just paid $500 a month in tax and interest, right? If that's a high amount. If we look at student loans, right? And I know from experience, my daughter has a student loan. Her interest rate's 12%, right? So every month that she puts money into that, pays money into that loan, a good majority of that money is going towards interest.
That's right.
And it's so these kids that are getting out of school with these high student loan debts, it's going to take them 20 years to pay it off.
Maybe even more.
Maybe more, exactly, depending on what they owe. I mean, like I said, with my daughter, she's paying, 11, 12%, and she pays $800 a month, and 600 of it goes to interest. So $600 a month in just interest alone.
That's right.
Right. And it's a crazy number. And that's why so many kids are in debt when they get out of school, and they're paying $1,000, sometimes more than that a month. It's like a mortgage payment just to pay for a student loan. Now they're just starting out in a job, just starting out in a career, and they're just going to keep racking up this interest. And I think this, not only is it great for, to get out of debt, credit cards and things like that and mortgages, but also for student loan. This
Oh,
is
sure.
a great opportunity for that. And I know I want to step back a second about when we talked about, in your own bank and infinite banking, you know, I, I'm sure, and everybody else that's listening today knows that you put your money in the bank, you're getting less than 1% interest, right? So the minute you walk in the bank and you put your money in there, the bank's like, thank you so much for depositing your money. You walk out, and now they just lent it to somebody else at 12% or 5%. So they're making money on your money, and in return, giving you less than 1%.
Right.
So
And
I
they
think
can do
that's,
that. They can
yeah.
do that 7 times with every dollar.
Mm-hmm.
Yep.
Yep.
That's why we say, wouldn't
It's,
you rather be the bank?
yeah, exactly. But I mean, think about this too. If, say, everybody decided at one time to take all their money out of the bank, right? That same bank, take all the money out, that money won't be there because it's lent out, right? They've loaned it out already. So in reality, your money really isn't there, unfortunately. So I think the concept here is that being your own bank means use your dollar like a bank does. Give every dollar 2 jobs and create compounding interest for yourself. This is, I think, is a great strategy. And happy that this is a topic we're talking about, because I think nowadays there's so many people that are in debt. And I've looked at statistics, and about 75% of households are in debt, in some form of debt, whether it be a mortgage or a car payment or a credit card loan.
Yep.
So, I mean, if that's what you've seen, Bob, I mean, I know.
Yeah, it's scary, and it's getting worse.
Mhm.
Yep.
Yeah, like I said, this pandemic just put everybody in a tailspin, and now everybody's trying to catch up from it, getting back to work, getting back to normal life, and now everybody's trying to recover from all the debt they've created over this time. So I think this is a great opportunity to be able to share with our clients and everyone out there, that there are solutions to helping you get out of debt. So, Bob, I want to thank you
Absolutely.
so much for coming on today, Bob, and I appreciate
Appreciate it.
all the wisdom that you share with us. And I want to thank everybody for joining us, and stay tuned for part 2 of to learn more about how to eliminate your debt. Have a great day, everybody.
Cancer, 16 rounds of chemotherapy, multiple surgeries, feeling alone, feeling isolated. Those are the things that I felt while I was going through cancer. Those are the things that someone is feeling today. One Tough Cookie is here to help.